We have a great question here from Rolando asking how far we think the ECB will allow the euro to appreciate against something like the dollar in the current situation with low inflation, as well as the recession from the pandemic, and the impact that it will ultimately have on the export competitiveness of the eurozone. Now, this is a great question, Rolando, and in terms of history, the ECB has been known to jawbone the currency once we've reached certain exchange rate prices versus the US dollar. And the excellent team from Nordea Investment Bank had a piece out recently about just that the other day and highlighted two charts that showed the ECB trying to jawbone the currency in previous years. The first example would be 2015, shows various times ECB members trying to jawbone the euro almost every time the exchange rate moved above that 115 level. And then in the second example, going back to 2017, also showed members trying to jawbone the currency every time it went back above or breached that 120 exchange rate versus the US dollar. So there definitely is some historical examples of the bank jawboning the euro when the exchange rate reaches certain levels, levels that they felt uncomfortable with. Now, with the dependency on exports for countries like Germany, the recent appreciation in the euro has seen some speculative questions being raised on whether the ECB can allow this trend to continue. As you know, recoveries in the eurozone is usually led by net export. So arguably a stronger euro would hamper that and hamper any meaningful recovery in the economy. So according to the ECB's June forecast, the current levels where the euro is trading at versus the dollar is substantially higher by about 9% from the prior forecast. So the strength will definitely not be something that goes unnoticed in the meetings ahead. Interestingly, though, we also had ING Investment Bank out recently with a great research article, and they talked about this and some internal research from the ECB that actually concluded that the more credibly and effectively monetary policy can counteract external inflationary pressures, the lower the pass-through or exchange rate movements will be. So the bank will be able to use the current exchange rate as well as the downward inflationary or inflation revisions as further arguments for increasing and extending their current pandemic emergency purchase program. So in that sense, the bank might not have the same inclination this time around to try and jawbone the currency as one would normally expect them to do. But having said that, at 119 today, the euro dollar is definitely something that the export part of the economy can't be happy about at all, especially given the shock to exports that's already seen from the pandemic fallout. And of course, the current drop in inflation that we've seen so far as well. So I think there is reasons for them to be able to accept the current appreciation according to the work that ING Bank has done. But I also do think that there is reasons for them to want to keep the appreciation in check when it comes to the export part of the economy as well as inflation. And it will be something interesting to keep in mind for the upcoming ECB meetings as long as the euro dollar continues to break to new session highs.